A rally day on Wall Street as a cooler inflation print sent the bulls running wild. Two sectors outperformed the pack. Communication services climbing 2.6%, boosted by big gains for Meta, Alphabet, and Netflix. And consumer discretionary up around 3%, led by Tesla, Airbnb, and Mohawk Industries.
And for more on this market rally, let's bring in Evercore ISI Vice Chairman Krishna Guha. Krishna, good to see you. So you heard Loretta Mester here on Overtime just moments ago. Now, and she sounded a little iffy on the need to cut to immediately. Even after this tame CPI inflation print today, you think the Fed needs to remain in cutting mode? What are the implications for investors?
So look, standing back, I think the really big thing is since the beginning of this year, just a few weeks, but we've had this big inflation and rates scare. I think we traded a long way on pretty thin data. And what the actual news we got today, inflation not as strong as feared in the US, and for that matter, not as strong as feared in the UK either. So I think what the market is waking up to is, there really actually isn't a lot more grounds to be concerned about the inflation process now than we thought was the case in the final weeks of 2024. Does that mean the Fed needs to rush to cut? Absolutely not. But does it keep the Fed on a pathway where the data is consistent with delivering a couple of cuts this year? I think the answer to that is yes. And I also think it's still possible that the first cut could come in March. Now, not perhaps over 50% likely, but more likely than the 1 in 4 the market's pricing right now.
What's the impact of the strong dollar? What does this environment say about international markets that investors should be paying attention to? And I've got an eye on India, which did very well in 2024, but is trading near the low levels of where it did in 24.
So look, the strong dollar is just a giant wrecking ball as far as all the other currencies in the world are concerned. So not just the weak performers, but even the relatively strong performers outside of the U.S. Nothing can stand in the way of the dollar. And it's because the U.S. economy is performing strongly. We are expecting, of course, fewer cuts from the Fed now than was the case, say 3-6 months ago. And of course, the strong dollar is kind of robust to different versions of what we might get from President Trump. If we go max MAGA on tariffs, an unconventional policy, that'd be dollar stronger. But if we go through the more conventional pro-Wall Street business-friendly route, well, that's going to pull foreign capital into the U.S. That's also a strong dollar. So, of course, there could be a rally in some of the other currencies near term next week if President Trump is less aggressive than feared straight out the gates. But I do think strong dollar is a really powerful theme right now on a global cross-asset market basis.
Krishna, what do you make of the fact that we've seen this, I'll call it a quiet climb in crude oil? And I realize from a Fed perspective, when they're looking at CPI, they strip that out. But we also know when you see energy prices go up, in general, it tends to start to ripple into other areas of the economy.
So you're right. That's something that, we should be paying attention to. There is a hint there of stronger growth, and of course, we did have that strong December labor market report in the U.S. I'd like to see another couple of reports to get a sense of whether that is a one-off bump or the beginning of some, renewed step up in momentum and potentially renewed tightening post-election. Very clearly, if the labor market actually tightens on a consistent basis with falling unemployment, for instance, the Fed is not going to be cutting until things stabilize. With respect to oil, I think there are some issues, of course, also potentially on the supply side, some cracking down on Russia's shadow fleet of tankers. There's, issues about where do we go with Iran sanctions under a Trump administration. So probably some supply as well as some demand factors in there. But it is certainly worth keeping an eye on, both in terms of information about growth and also, of course, inflation pressures.